Hello, everybody. Jim Malone coming to you live on Dallas Trading Floor. Well, the market pulled back again today. Ouch. It is, boy, I tell you, it is really, it's tough market. And it looks as if, hey, man, we're probably going to be going even lower. I'm basically out of the market. I've got I've got some, I'm mostly in cash. I do have some shorts. They're doing well. I closed the Disney short today. I had a nice little play on Disney, and that one looking pretty good. The what happened basically, of course, is that just like everything else, we're just seeing we're just seeing an absolute rout in the market. So definitely not the greatest time to be long here. I can tell you that. But let's see if we can. For people, let's see if we can do that. No, I don't think that's going to work. Trying to get the TikTok thing to work. By the way, if you are watching on TikTok and you want to see all the charts that I'm putting up, super duper easy to do. Just go to my profile up here, and you should see the live feed for the TikTok. For TikTok. So basically, what happened today? Well, the market underperformed. The Dow Jones turns negative, and there's new inflation data. It's actually worse than we thought. So, the Nasdaq stocks are getting hammered. Everything's kind of getting hurt. Just wanted to put this out there for everybody on Rivian. Remember the Rivian stock everybody was excited about? Well, not so much anymore. Basically, Ford basically decided to pull the ripcord. They dumped 8 million shares of RIVN, and Rivian is now it's really hurting. I mean, it's really down there. Let's kind of take a look at RIVN and see kind of what's going on here with Rivian. It's not a very good it's not a very good situation with Rivian. This is one of the first. This probably on this will be. I think they'll be going out of business. My guess. I mean, I think they could be sold for parts, but we're going to see some pain, and I mean pain, in a lot of these automotive stocks. I mean, Tesla's holding up because of their production and the fact that they're making money, but all these other companies, even the Chinese automakers, boy, I just don't think that it's happening with them. Very, very tough market. Very, very tough market for them. And just a kind of deal thing. Also on the Bitcoin front, here's the key takeaway. I showed this yesterday a little bit, but I kind of want to put it out there for everyone because I think it's really indicative of what's going on. 40% of Bitcoin investors are now underwater. That's according to the new data that's come out. And I've been showing the GBTC for weeks, not every day, but this kind of predicted it, and that's the thing. Usually it's amazing how it'll show up in the charts. And what is the GBTC? Well, the GBTC is the Grayscale Bitcoin Trust, and it basically shows kind of what's going on in Bitcoin. This represents about 4% of the world's Bitcoin. It's a lot, and basically for really since about February, it's been moving on down, moving on down. It's now at 19. It was way up here at 55. Basically, it's lost 2/3 of its value. What this is telling me is that the pain, I don't think, is over yet for Bitcoin. Now the question is, how can we benefit from that? How can we benefit from that eventuality? Who knows? I mean, but I think that we possibly could be doing some shorting on the GBTC. But I'm going to look into that and put it out there for everybody that's on the action trader alerts. I have been a little bit tardy on that, but if you're not already on our list, super duper easy to get on it. www.dallastradingfloor.com, and first and last name and email address, and that's free. And then of course we have the great Discord room, which is a lot of active traders out there that are kind of doing things. I know these are really tough times in terms of where it's all at. So just to kind of show you the deal with Rivian. I mean, I wish I had shorted this one. There was a little bit of a dead cat bounce here, but as you can see, just a terrible chart all the way around, and just not looking good. Here's currently what I have long. This is the only thing I own. It's the only thing I own long. Everything else is short. That's CVX Chevron. And believe it or not, Chevron was up today. I mean, it's one of the few companies out there that seems to be holding out. I think mainly because, this inflation is just, man, I went to fill my car the other day, I think on Monday, and I was paying $4.16 a gallon, which for me is a lot. We're here in Dallas, and usually the prices are cheaper, but amazingly high prices, and I think it's probably going to stay high at least through the summer. So who knows? But this is the chart of Chevron. We had a nice bounce here. The question is, could you get in here? Well, yes, you can. It's in a trading range. I'm going to be holding it probably, hopefully. I think it could. I think this one could move up to about the 170 range, about $7 off that. I probably would sell at that point, but we do have the relative strength line, which is pointing upwards. So one of the only ones I can find out there. I can tell you, it's just tough market all the way around to find anything that's really working. All right, I want to go into the spreads that I have and show you kind of what's going on. They're doing great. They're doing great as the rest of the market is doing poorly, but they're doing great. Boeing is the first one out there. And of course, Boeing, unfortunately, for people that are holding it long, it did move lower today. Here's the chart of Boeing. And as you can see, it's just awful. This is where we initiated the short here. Excuse me. And we're currently down today after hours of trading at 129. So basically, as this thing moves lower, the better off we are. Basically, here's a recap kind of where we're at on the Boeing short. This is a little bit of a longer term short. We did short it way back in April 25th. And when we shorted it, we were out of the money here a little bit, but then as it's moved lower, it's done better. Now, the reason I like these bear trades so much in this kind of market is because they limit your risk on the downside, but they typically have some very good upside potential. With this one, when we got in, our entry cost, was $435, but we have a potential to make, we have a potential to make $565 if it just kind of keeps in this range. Currently, we're at about 442 for the fair value of this trade. So if we closed it at the fair value, we would make about a 442 profit. So we're getting to the point where we're probably, looking at possibly closing it early, depending on how much more we get. The question is, can you make 80 or 80? If you can make over 80% of the profit, sometimes it's worthwhile to close a trade early. And that way, basically, and then reevaluate and then go into another trade. Here's the second one that we have, and that basically is Salesforce. We opened that one fairly recently on the 2nd of May. We opened that one, and that one seems to be working pretty well. Let's take a look at the Salesforce chart. CRM, of course, is the symbol. Now, the interesting thing about some of these ones that I've been shorting, they're all Dow stocks. Believe it or not, Salesforce is a Dow component. I mean, I find that hard to believe, but it's true. It is a Dow component. It was down today, 161. As you can see, we shorted it there, and we have a nice little movement down. Now, the question is, are we going to get a bounce? We may get another bounce. So, we're not necessarily at an optimal time to re-enter shorts right now. What I'm going to do is I'm going to be doing some screening, and I'm going to be getting ready for a bounce. If we get a bounce, that's when we're going to go re-short. But right now, I'm staying basically with the 4 stocks that I currently am short. And let's take a look at CRM, see how it's doing. As you can see, this one has just kind of taken a swan dive. which, for everyone else is a bad deal, but this is a pretty low risk trade. For each contract, $275 basically risked. 225 is the potential gain, and I think that we're at 92, so we're about halfway there. Looking pretty good on this trade. And we're hardly into the trade at all. This one goes all the way out to July, but I do think that through this summer we're going to get a lot of downward pressure in this market. So instead of being long, I think the best thing is to be short with bear put spreads, because as these big stocks go lower, and they will, we can definitely pick up some money there. So I'm going to really concentrate on that, maybe put out an educational video on sort of how I'm doing it, what tools I'm using, and that kind of thing. So this is looking pretty decent as well. And I think it is definitely picking up some steam in terms of that. Now, before we get to the questions, I want to get to the one stock that I did close today. I closed it for a profit. That was Disney. Part of the reason I closed the spread on Disney was because they had earnings. The earnings were not good, and of course it went down. Now I was a little bit risk averse there. I thought that we might get a bounce from that. That's part of the reason I closed it today. But I think you can see that the after hours numbers on this not looking good. They closed at 105, which was way down. You can see this is where we started the bear put spread, and it's just gone down from there. It's gone down, down. It's gone down there, and then currently it's off at 101. I probably shouldn't have closed this spread, but I just didn't want to risk the profit that I had. We didn't make. We did okay on this one in terms of the profits, but basically this is sort of what happened. We were at 105, and of course it's now after hours down to 101. But as you can see, we were basically at about 395 when we closed. We made about $375. We didn't quite make all the money on this one, but I decided better to take the profit here and open another trade rather than risk possibly getting a dead cat bounce or something like that. This one was a pretty good little trade. $330 was the risk here. Again, all these trades typically are under $500 risk. I like to really I'd rather have more trades with lower risk than bigger risk and fewer trades. So this one, what I'm trying to do on all these trades, and if you're on the list, is trying to put out some spreads that I'm doing, some bear put spreads that I'm doing, and as they go, risking $500 or less on each trade. That's one of my criteria, and then closing them. Typically if we're before earnings or something like that. We closed this one. We did okay. It's about $375. We could, if we hung on to this one, we possibly could have gotten $675 if it had closed below 110. And it basically today, that's sort of what's happened, because after hours it's at 101. So very close to making all the money on this one. We did close it early though, just to kind of protect our profits. And that, that's a big deal. That's a big deal in shorting. You really want to take your profit a lot quicker when you're doing that in shorting. All right. Netflix, this is another one we just put on. This was put on the 9th, so we've only been in this one 2 days, so not a lot of time here. We're already up on the trade, so that one's looking good. Let's kind of look at the chart for Netflix. NFLX, of course, is the symbol for Netflix. Netflix, I think, is going to be in a world of hurt. It's just the way it is. I mean, I think they're going to go to a ad-based product. That's looking like, because they just can't make the numbers, and that's where we shorted here. And of course it's down from there, and it's down after hours of 165. Amazingly, think about it. It peaked at about $700, and now it's worth 165. So basically a quarter of itself. This was basically back here in November of 2021. So amazing amount of destruction that you get. But whenever you get a situation like this where it crosses below that that 200-day line, look at how this 200-day line is sloping down. This is showing lots of weakness. We want to kind of look to see if we've got the 200-day moving average sloping down. That's a good shorting symbol. Then we want to see it kind of being rallied up to that 21-day line. That's what happened here, and then it rallied and boom, and then lost all of its cookies right there. So this one's probably going to go longer. We've only been in this one 2 days, as I say. I mean, this one is not as significant. Here's kind of where we're at. We're going to probably have to redo. We're going to have to redo the trade dashboard here, because when we constructed the heat map, we didn't give it enough downward run. This is probably going to run downward very, very quickly. And as you can see, once it gets down there, we just hold on to it as long as we don't hold it through earnings, and then it just makes more money, hopefully. So here's the deal on this one. Not a lot of return on this one. The risk on this one, 271 per contract, not a lot. Potential gain on this one, 225, or about a 81% return over a period of just about 1, 2, 3 months. So pretty good on that one as well. Pretty high level of potential profit on that one. All right, last but not least, I know I've been kind of yammering on. Need to get to your questions here. The last one is the last short that we have currently on. This is on the QQQ overall. This is the Invesco QQQ. Of course, it covers the Nasdaq 100. And this one we just put on on Monday as well, the 9th there. We're up about $82 on it. Let's kind of see what the overnight action is on the Qs. Now, the interesting thing about the QQQ is it's one of the few ETFs that trades 24 hours a day. And it does look like, yes, it is off once again after hours. Not a good sign for the market overall. We did have we bounced on Tuesday, but we're back down. So I suspect probably another down day tomorrow based on this 291.20. Now the question is, how will that work? Well, this is a little bit shorter term trade here, but we're already way in the green. I'm gonna have to readjust this again. But this one's kind of a nice trade because the risk on this one, we have $435 at risk, and we have potential of making $565, which is not bad. And this is basically in about 2 months, as you can see. So we're already making some very, very nice progress on the QQQ. So, I'm sorry, that's Boeing. What am I saying? I gave you the wrong chart there. Pardon me. Yeah, I wish we had made such great progress. That would have been awesome. Basically, this is the progress here. At 291.74. So we're getting into the green zone on this one. We have a potential. The best risk of this one is $519, so a little bit above 500, and we could potentially make $981 on this one if it kind of continues its movement downwards. And we have basically 2 months for this. So, but we're up $82, so that indeed is looking pretty good. Okay, so let's get to the questions, and thank you for holding on. Appreciate everybody. And here we go. All right, the QQQ and the SPY support. I wish I could give you some support. I don't think there's a whole lot of support on these, but let's take a look first of all on the weekly chart. That's going to be kind of give us some ideas here on where potentially we could get some support on this one. If we look back in time here, I think that we're going to get some support right at about, and you're not going to like to hear this, but I think that we potentially have some support at about 260. Now that's what I'm thinking, that this one will bounce probably tomorrow. Currently, right, this is the $300 level. I think we're going to get a bounce on this one tomorrow, but we'll see. I mean, let's take a look at the daily chart to see. Not, it's, unfortunately with the Qs, we're just seeing wholesale selling here. And so I don't really see a whole lot of support. Now there is a consolidation here. That was the last one, but we're below that now. So sort of the next stop down is going to be probably right about here. Let's take a look to see what the pattern rec is saying on this to see if we can find some support. Basically, we are, yeah. I mean, we've blown through the last two. So basically, we are below the last two support levels. So we may be, we're probably going to go even lower. So my guess is that we're headed for 250. Yeah, we're headed for 250. Not something I want to talk about, but so I think that at least through the summer we could be seeing a lot of pain here, and so I definitely think that at least for the QQQ, we're looking at about 250. That's part of the reason I have a short on it. I think it's moving lower now. The spider, sort of the same situation we have with the spider, and that is basically with the spider. We're below 400. That's really a key level here, 292. So the question is, where do we go from here? Well, I hate to tell you this, but I think that is where it's going to be. So if we look at the price there, this is the last support level. We're looking, basically at about 360. About 360 on the support on the SPY. So I would say 360 is support on the spider. So we're looking at probably going lower. I don't know if I'm going to be shorting it, but I'm looking possibly to do something there. I'm looking possibly to do something there. Now, there are some vehicles that we can look at. I'm just looking here to see. Okay. Interesting. Okay. So really, yeah. I mean, I think that's what we're looking at. I think that's what we're looking at, the spider. So not the cheeriest news. I grant you that. Not the cheeriest news. I wish I had better news for you there, but I don't. All right, let's look at two other ones from Jeet. Let's look at Dino. Dino is good. This is a Sinclair. By the way, this is a Dallas company. Hard to believe that, but it is. This one possibly. I mean, if you're going to be in the market at all long, this is definitely the kind of stock you want to be in on. I was trying to get a piece of this one, but I just, I got stopped out at third. I got stopped out, and then boom, look at what happened. It moves very nicely, moving up nicely after hour. But right now on this one, I would not buy this one. Why? Because it's extended. So I just don't think you can. I just don't think that you can buy this one. So Dino is extended, and what do I mean by extended? Well, in this kind of market, well, actually, in all kinds of markets, if it moves above about 5% above the what they call the pivot, and the pivot in this case is, let's get the correct one. The pivot in this one is basically 42.39. So if it moves above that, if it moves more than 5% above that, and it definitely has, then it's what they call extended. So you don't want to buy them. Ideally, you want to buy within 5% of that pivot. You can buy up to 10% above the pivot in a good market, but we're not in a good market. So right now, it's not a good time to buy. You just, wait. There'll be another bus along. There'll be another thing that you can buy. But right now, I would not buy Dino at this level just because Dino is extended. And it's just one of those things. It's one of those things. All right, question. SOX, a short, SOXX. I don't know if we want to do that. Let's take a look. And that is the, yeah, you know what? Do you want to do this? I think I would be a little bit concerned. I think you're better off shorting using something like the, um, this is the semiconductor index. I don't know if you want to, you could short this index, but here's the thing. I don't know. This is, I'd be a little concerned because you could get a dead cat bounce on this one. I think you're better off, if you're going to do that, to do something like to short the Qs or go to the SQQQ. That would be my guess. This is the one I think you want to buy, Matt, is instead of doing the semiconductors, and I definitely think they're going down, no question about it. But I think when you're shorting, especially when you're shorting indexes, it's better to have a broader based index, and I think that that one might work well for you. This is relatively close to the buy point, and this is the SQQQ. This shorts the entire Nasdaq. So let's say, for instance, you have a Roth IRA or something like that, and it doesn't allow you to short in that. Well, you can buy this. It's called the SQQQ. It does short that. So this is one I probably think that might be a better option for you than the SQQQ. But the SQQQ rather than stocks, XOXX, the semiconductor index. That's the one I think might do better for you. Anyways, thank you. Everything is short right now except oil. Yeah, I wouldn't short oil. I wouldn't short oil, and the reason is because we could have, unfortunately, we could have another shock, related to war or whatever. I can't predict it, but don't short oil. It's really, oil is the ultimate inflation hedge. I mean, everyone talks about gold and all this stuff, but if you look at it, gold hasn't really done all that well, and oil has done great. So you don't want to short it in a market like this. The areas you want to short in a market like this are the high flyers, the former high flyers, the stocks that have had the most run up. And now many of these are in the enterprise software area. This is a great place to look. I'm going to be doing some screens and hopefully getting some ideas out to people, ideas to people out there, because I started shorting basically last week using bear put spreads, primarily stocks that are really big like Boeing, and we knew that Boeing was bad. We knew, we kind of knew that Disney was bad, and it's proven it. CRM, but when you're shorting, it's very important to not short the smaller stocks. You want stocks that have a lot of shares out there. Netflix is a good one. We're short that. And I'm also thinking that possibly Amazon is going to be a short. I know that's hard to believe that Amazon would be a good short, but what's happened with Amazon is right now their price to earnings ratio is very high. And I just think that's going to adjust down. And I think a lot of people that have profits in this, a lot of the funds that have profits in these ones are going to be selling them and taking their profits and, going to cash because they're losing on so many of these other things that they have. They're going to start selling everything. And this is what happens when the market starts to move into a downward trend, is that even the places where there's profits are vulnerable because people just start to sell those just to cover their losses. So, it's definitely a good. It's a time to be short. That's really the end all be all. Everything is below the 200-day line in the world. No, I don't think so. Well, but let's look at Apple. Look, there's two modes in the market: fear and greed. Right? We're in the fear stage. Remember, we're gonna build our watch lists because when this is through, when people stop buying on the dips, when people stop listening to Kramer who's saying buy, that's when we're going to start going long. But right now, there's lots of fear, so we can short. It's a good time to short. That's all I can say. That's all I can say. Here is the let's go to the let's go to the spider again, SPY, and take a look at this one. The reason I like this one is because it really kind of tells the tale, and the tale is it's sort of a tale of woe. We're below that 200-day line. Remember, we don't really want to buy anything long below that 200-day line. That's really a key. And if the S&P itself, S&P 500, is below that 200-day line, that's not a good sign. That's not a good sign. There's just very few places in the market that are looking good. And we can kind of look, let's look at the one area that is, there's two strong areas in the market right now. Well, there's actually three: oil, utilities, and consumer staples. So let's look at the energy. Let's look at the XLE. And this is key, because here's the thing about the XLE. This is one of the few strong areas of the market. Notice how it's above that 200-day line. That's very, very critical. That's very, very critical. Also, let's look at XLU. That's the other one here. And that one is still above the 200-day line as well, but it's coming down. This is the utilities here, okay? So here's why we don't want to be in technology. The XLT, which covers the, is that right? No, XL, I think it's, so F, no, that's the financials. Yeah, there we go. Okay, so this is the financials. Look at them. They're terrible. So we don't want to be in the financials. XLT, I think it is. Yeah. No, it's not letting me. Let me just see if I can see what that is. I'm for. Let's see. That's the fund. XLK. I'm sorry. For some reason, I always forget that it's the XLK. This is the technology. XLK. And what I'm doing here is I'm just showing you the sectors of the economy and why you don't want to be in them. Look at this. We have a huge, this is the 200-day line for the technology sector. This is all of the market, basically, the index for the technology sector. It's below it too. So really right now, the only sectors you even want to consider buying in are energy, utilities, and possibly consumer staples, but I'd even be careful there. So right now, it's just not a good time to be long, basically anything, and then try to be short everything else. And so I'm going to try to, put it out there. All right, Brumble up after hours. They don't care about inflation. Some of these ones, these are dead cat bounces. A lot of times what you're seeing, I think this is the dating app. Is that right? BMBL. A lot of what you're seeing is unwind of short positions. Okay. Bramble. They are up a little bit. That's true. Let's look at them. A lot of times what you're looking at here is an unwind of a short position. But if you look at the overall trend is down. Look at the 200-day line. It's below that. So this is radioactive, man. You don't want to be in this one. This one potentially is a good short, but the problem is there's not a lot of meat left on the bone. This started up here. Bramble, the online dating app. This is going to be toast. This is going to be like the Peloton. Let's look at Peloton. Let's look at talking about ones that are toast. Let's look at my all-time favorite. I did short this one a while back. The Peloton. I didn't do a full-on short on it. I just did a spread on it. PTON is another one that's just, as you know, been horrible. Let's see if I noted it on. Yeah, look at that. That is so awful. Look at that. We were all the way up here at 160 and we're at 12. This is Peloton. I guess, people, all those bikes that cost $4,000 are all going into the closet. That's what it's looking like to me. So not a good situation, everybody. All right. I have taken so many questions from, and I really appreciate that, from YouTube. Let's take some TikTok questions here. Just to kind of round things out. U.S. stock market is toast. Good. Yeah, call to Tokyo. Yeah, I agree with that. What do you think? Okay, just trading TQQQ and SQQ, not a bad idea. Not a bad idea. You want to be long TQQQ. I mean, you want to be long SQQQ and short TQQ, but you know what? I would be careful about that as well. Answer my question, please. Okay, the Earth is flat. I don't know what this is interesting guy. What do you think? Do you think I should buy in the dip with Disney? Okay, we're not at the bottom of the market because that question tells me that we're going to have some more people come in and do silly things like try to buy Disney on the dip. So that I'm not trying to I'm not trying to I'm not trying to single you out. But here's one of the things you can tell for a bottom. When everybody stops buying on the dip, that is a signal for the bottom. And if you're even considering buying Disney on the dip, that means we're not there yet. So it's a good time to short. Just wanted to put that out there. Wanted to put that out there. All right, let's look at Disney. And of course, this is the one I did close the short that I had on Disney today. Probably too early, but they did go through earnings, and this is a truly wretched chart, as you can see. Let's go over to the weekly. Let's go to the monthly. Let's just kind of show you kind of the damage that's happened. See, and you can really see it here. You can really see what's happening in the market. Really, from about 2008, it just very nicely moving up, and then kind of when it got here to about 2020, that's where it started to feel the pain. The pain started to happen there. And then all of a sudden, it drops below this very, very critical line here. So this line that we're talking about here, there's only one line on this one, and this is on the monthly chart. This is the 30-month chart. All right. You notice how when it drops below that line, that's really a signal to get out. So the time to gotten out of Disney would have been right back here in basically in about November of 2021. That would have been the time to have gotten out of Disney. And as you can see, ever since it's just gotten weaker. So not a good thing to buy on. Don't buy this on until we see it form a base, and that could be a while. It's got to come down and then reverse higher. Until it forms a base, you don't want to touch Disney. I don't think you do. My opinion there, but I don't think you want to touch Disney. All right, UVXY killed it. Okay, this is one of the. I think there's going to be a lot of movement. A lot of people are going to be very interested in these negative leverage ETFs, which in the last downturn can be very good. But let's look at this. This is the VIX. I don't. On the last go round, we had the TVIX, which it went out of business. But this is starting to. I mean, you can see this is starting to make a move. Let's go back to the daily chart. Let's take a look at it. This is getting potentially. You can see how this trades. It trades up to these levels. So the question is, we're not near. It's not nearly time to get into this. The time to get into this is when it makes us move above that 200-day line, and then it makes it move above that reversal. So I'm going to put an alert on that line, and the reason I'm going to is because this will tell us that we're now in an upward trend. We're still in a downward trend on the TVIX. We're still on a downward trend on the TVIX. So when it moves above this line, and that would be at about 28. That's where you're going to see it. You're going to see a buy signal for this one. But right now, it's just a short term. It's just short term. Short Disney due to corruption. Well, I did short Disney, and I did well on it. I think Disney has lost a lot of its luster. It's not being run very well. Walt probably turning over in his grave. But they're just woke, and people don't want to. People with kids, they're not interested in going to theme parks where they have pedophiles. So that's kind of their problem. They've got a park of pedophiles, and people don't send their kids to things like that. They don't want that. So they've lost their way, and whatever. They get paid a lot more money than I do. All right, I bought Apple at 130. Should I sell it or hold? Good question. And that's Apple, AAPL. I would be on the. I know this sounds kind of a bad thing to say, but I am. Here's the thing. I think is going to happen at least for the time being. I do believe that Apple is going to move lower throughout the summer. So I would sell here. I would sell it, and the reason I would sell it, take your profits because we're trading below the 200-day line. The outlook for Apple, at least in the near-term future, and again, it's a great company, but remember, at the end of the day, all of these companies that were doing so well, if the market continues to move down and we have inflation like we have, they won't hold up. They will go south too. So I would sell, take your profits, go to cash. That's my humble opinion. It's my humble opinion. All right. Our great leader has done well for the market. Yes, he has. It's amazing. We have had so many unforced errors in this country. It's kind of remarkable. By the way, we're sending $40 million of your money, which, by the way, we don't have. We're going to print that to the Ukraine, basically. And what's going to happen, of course, to that money is that some of it's going to go to armaments, but a lot of it's going to go into the pockets of people, lobbying groups, because that's how money is stolen really from the federal government these days. And also is that they have these pressure groups that's what apparently that's what they did with Trump's hotel in D.C. He was basically sold it, and of course there was a profit on it. I don't quite know, and of course that profit was distributed to all of these quote unquote progressive groups, nonprofits. So that's how it's stolen. That's how the money's stolen. We're going to be seeing a lot of money being stolen on this Ukraine deal too. So. Just it's beyond reality. I mean, the first thing that the clown show did, and I'm probably going to get censored here, was cut the Keystone Pipeline, and now we have $5 gas. So it's just it's a hit parade, really. Anyways, okay. Do the last chart. Do last month's chart on UVXY. All right, let's do that. Let's go over here to UVXY. Let's bring it up. UVXY. And there we go. And what I'm going to do is I'm going to roll it back. Let's see if I can do that. All right. So let's see if we can roll this one back. Currently, we're here, so let's roll it back to April. Oops, February. Let's go one more month. And March. And let's go back to April. Okay, see this is kind of interesting little demonstration here. As you can see. And remember, this is a negative ETF. This is a VIX. So what will happen is it's come down here, and then it gets basically the market turns, and then if we move it forward by the week, so basically where we are, let's put the line in here. We start here, okay, and then as you can see, let's move it. Let's go forward a week. All right, you see how it's starting to turn? Yeah, see how it's starting to turn? Yeah, and then we move by the third week, we're turning up to that to the 50-day line, and then once it crosses that 50-day line, there we go. It's now coming up to the 200-day line. And let's go one more beyond that. Okay, you notice how it's testing that 200-day line, and then by today, let's go to today. It's still testing the 200-day line. If it can move past this 200-day line, it's likely going higher. So here's what you want to do to buy this one. take a trend line and put it right here at about 20, and then put an alert on it. And basically, if, oops, let's see if I can do that properly. Oops, I did it right. Option, click. There we go. Oh, no. All right. Option, click. There, okay. So if it moves above 20, that's kind of where we want, that's where we want to see it. So if it moves above 20, that's a buy signal, and it's got an 89. But right now, I would not be a buyer of it. But interesting, interesting point that you bring up. Okay, well, we are almost at the end. It's 45 minutes into this. Let me take one more question from TikTok. Thank you, everybody, so much. Hey, by the way, I'm going to do my little groveling here. But please, I need more viewers on here, because I think I have some good information to put out to people on how they can save their thing. But please smash that like button. Please smash that like button. That really helps me out. That really, believe it or not, that really. When I first started this, I didn't know the difference between likes and all stuff. But please like it, and please subscribe. Very easy to do. Also, if you want to get on our list, very easy, and it kind of keeps you up to date with everything. That's easy. Just go to www.Dallas Trading Floor on that one. All right, I am out of time for today. I'll be back tomorrow at 5. Thank you, everybody, so very much for taking a look at the show, and hopefully we will be back tomorrow at 5. Hopefully with some ideas on how to make money in this tough market. Right now, I'm mostly in cash. I am moving to the shorts. I think that's where you ought to look to see too, where there's some potential there. I'm going to try to put together a little bit of letter, I'm going to look through some charts tonight. I'm going to look to see if I can get a list together of potential good shorts in the market. So until tomorrow at 5, happy trading.